Hello everyone and welcome to this explainer. Okay, let's dive into this because today we are looking at a topic that could literally save you thousands of dollars. Our source material warns that there's a silent predator in your brokerage account eating your profits from the inside. Which brings us to section 1, the margin trap, skipping the economic theater. So for this part of our explainer, I'm adopting the pragmatic, no-nonsense tone of Brian, who is essentially your CPA for the day from the hidden tax material. Look, when it comes to your money, we just don't have time for fluff or Wall Street jargon. We need a reality check. We have to strip away the economic theater and look at the raw truth. And this brilliantly illustrates what we're talking about. Take margin, for example. Wall Street makes it sound like this elite trading privilege. In reality, margin is simply a bank loan to buy stocks. That's it. When you buy on margin, you're just borrowing money from a bank or your brokerage. And just like any loan, whether it's for a car, a house, a business, it comes with a cost. You're paying interest. Every single day you hold that borrowed money, the interest meter is running, quietly taxing your account balance. Now you can see how this creates an incredibly frustrating illusion for investors. You see a green number on your screen, you think you've won, and you're celebrating those stock gains. But the harsh reality? You are often just paying taxes on crumbs. Here's exactly how the trap works. If you aren't accounting for the interest you paid on that margin loan, you're basically letting the bank take their heavy cut right off the top. And then, to add insult to injury, you're paying full taxes to the IRS on the remaining balance. You're bleeding money in two completely different directions, and just keeping whatever's left over. Seriously, if you fail to deduct this investment interest expense at tax time, you are essentially giving the IRS a tip. Let that sink in for a minute. The government requires you to pay taxes on your gains, sure, but they also allow you to deduct the cost of doing business. And that includes the interest you pay to generate those gains. When you ignore the margin interest you paid over the year, you are voluntarily overpaying your tax bill. Look, I don't know anyone who actively wants to leave a financial tip for the Internal Revenue Service, yet thousands of traders do exactly this every single year, just by missing this vital step. Let's move to and see how this builds into Section 2, the 1099-B solution, reclaiming your wealth. Okay, now that we know the silent predator exists, it's time to look at the actionable steps to actually stop the bleeding. The specific tax form we need to focus on is the 1099-B. Now, what's really interesting about this slide is that this single document is where the hidden tax trap lies in wait, but it's also the exact key to your solution. Every year, your brokerage sends you a consolidated 1099 document. It details your dividends, your interest, your stock sales. But the 1099-B section, that is the critical battleground for traders. It contains the data you need, but as we're about to see, the brokers do not make it easy for you to find the most important number. Here's the crux of the whole issue. First off, margin interest is a legitimate tax deduction. You are legally entitled to use it to offset your taxable investment income. But here is the trap. This vital money-saving number is usually not on the cover page of your tax document. Most investors, they get their 1099, look at the summary on page 1, hand it over to their accountant, and call it a day. But the margin interest you paid is almost always buried deep within the document, pages past that cover sheet. If you don't go digging for it, you miss the deduction entirely. So, here is your concrete 3-step action plan to protect your money. Step 1. Check your 1099-B. Seriously, don't just file it away, actually open it up. Step 2. Look past the cover page. You gotta scroll down to page 2, page 3, or sometimes even page 10 and hunt specifically for the line item labeled margin interest paid or investment interest expense. Step 3. Claim the margin interest deduction. Whether you use tax software or hand it to a professional, you must explicitly point out that number and ensure it is claimed. This is exactly how you stop tipping the government and start keeping your own profits. Moving right along to Section 3, build your fortress. Keep the math in your favor. You know, knowing how to pick winning stocks is really only half the battle. The other half, it's entirely defensive. It's about actively constructing a financial fortress around your gains. Don't be a passive victim of the margin trap. By understanding the mechanics of margin and the intricacies of the 1099-B, you take control of the math. You stop the internal bleeding from bank fees and unnecessary tax payments. And hey, the journey to financial literacy doesn't have to stop here. For more truth on protecting your wealth, the source material highly encourages you to subscribe to the Hidden Tax channel. It's where Brian, our CPA for the day, shares these crucial insights. The underlying message from the Hidden Tax channel is incredibly supportive. They are rooting for you to succeed, to beat the trap, and have a very nice day, financially and otherwise. Take a hard look at your own trading accounts and your tax filings. We've unmasked the silent predator, we've defined the margin trap, and we've laid out the exact steps to find that buried deduction on your 1099-B. So the crucial point is this. I want to leave you with one final, provocative thought to consider the next time you review your brokerage statements. Are you still leaving a tip for the IRS?